Thank you so much for having us on the Dwelling Show. I'm your host, Dantes. I've got the amazing, incredible Sterling White. Hey, Sterling, how you doing?
That was quite the intro there. So appreciate that. Everyone who's on here, go ahead and strap yourselves in because we're going to take you along for a ride and get your notepads and your popcorn ready.
Yeah, I love it. I love it. I love it. So, yeah, Sterling, obviously, I know you see your ton on Bigger Pockets. Anyone in the real estate sphere know that name. We've met briefly. I think it was last year you said at one of the conferences we went to. But for those who don't know you, just kind of tell us a little bit more about, who Sterling is and what you've been doing and kind of what you've been up to lately, actually.
Yeah, so I'll give everyone a Cliff Note compact version of myself. So, born and raised here in Indianapolis, Indiana, on the not so good parts of the city, where when you tend to drive through, even during the day, you would roll your windows up and also lock your doors. Single mother, fraternal twin brother, Section 8 housing, welfare, food stamps, and just had to figure out a way to get out of that environment. Tons of illegal activity, but ended up finding the more so legal route because I had to figure out a way to earn money. First product, and this is where the entrepreneurship spirit came into existence for me, was Kool-Aid Pokemon cards. And fast forward, how I got started in the real estate sector is there was one particular case, Ola, is that I experienced with my brother and I, just going back to childhood, is we're about 5 or 6 years old and we're sitting in the kitchen area and we're eating like ramen noodles and cut up hot dogs or something along those lines. We go upstairs, and as soon as we're upstairs, a bullet comes right through the back patio where I was sitting and he was sitting. So I may not be here. So that's one of my driving forces ultimately. And fast forward, got started in real estate 2009, construction side. Shortly after that, shifted to investing, where bought my first deal 2013, 23 years old, scaled to 150 single families. And then in 2017, made the entire shift to multifamily and now just own under 400 units. That's throughout the Midwest. That's all apartments. And I'll be sharing my trials and tribulations on here because I'm not perfect by any means, everyone. I still make mistakes to this day.
Yeah, I mean, that's really fascinating, actually. I mean, I was really shocked when you talked about the bullets flying through your house. That's crazy, right? And I kind of want us to dig into that a little bit. And obviously, I'm not from the United States. I was born in Africa, and then I lived in the UK. Now I live in the US. So I have a little bit of a different perspective. And with everything going on in America right now, not to get too political, but I kind of want to get your own like perspective, right? You grew up, on food stamps, like, you just said a Section 8. You didn't live in the best part of the country, but somehow you're doing pretty well, 400 units and counting. Um,
Mhm.
what do you say to that kid, like that black kid listening to this, right? Specifically, right? Like I can't make stuff work. Like the system is frankly has their knee on my neck. I mean, what do you say to that
Mhm.
black kid?
Yeah, I would say that kid or any type of kid that's in that environment is, hey, there is a way out. And that's one of my ultimate missions and purpose that I have is to be the ideal in the message because my twin brother, we are a case study in how much your environment really affects you. So one thing that my mother and I did, my mother did with both my brother and I, she actually moved us from that environment out to more of a suburban type location. And we were still in lower income housing, but completely different in terms of demographic. The schooling was significantly better. And I stayed out there. However, my brother went back to that environment that we were formerly in and took a completely different trajectory in life, is actually facing hard times. So I would say one is it's really comes down to your environment and just really putting yourself around people that are wanting to stretch themselves more. And that was one thing I always did. And you could say, in essence, I'm lucky that I experienced because I could have took the similar path as my brother did, but I decided not to. And I don't know if that was a higher being that ended up putting certain people in place that allowed me to take a different fork in the road.
Yeah, wow, that's really, really telling, actually. Yeah, I was not expecting that either. That's really. So your brother went back. Is it by choice? So I'm just kind of curious. I didn't want to just let that off. Like, why did he go back?
The group of friends. So where we were formerly living is we had friends that were there. He went back to that, and I formed new friendships. And that's when we were both in the same environment. She moved us out, and that's really where the fork in the road really changed. And we're both him and I are a case study. We're twin brothers. We're fraternal, but we grew up in the same environment. And that one little change there really changed the trajectories of our lives.
Thanks for sharing that because I also want, folks listening to kind of maybe use that as a point in which they can make that mistake, but stop themselves, right? Like, do not go back, right? Because that's kind of why I wanted to touch on that. So you said you went from, yeah, sorry, go on.
And one thing is, it's tough because I had another aha moment or light bulb that I was out, and this is a quick story for everyone. I was at a college party having a good time. This was my early 20s, and I ended up later dropping out in college to focus full time on real estate. But that's a whole nother subject. But I had this moment to where I ended up drifting away from the crowd, and I was out in this middle of this boat in the middle of this pond or lake, whatever it was. Beaming question comes down to me and says, Sterling, is this what you want to do with your life? And up until that point, I was just drifting into average land. I was still in construction, hadn't shifted to the investing. And I answered back, no, this is not. Three things I did. First one was I cut off my friends because great people, but they were not going where I wanted to go. Second was I cut out the news. Still to this day, I didn't even know the NBA draft happened until just randomly. That goes to show you how much I'm out of it, which is, I would say it's more of a good thing. People are like, how do you keep up with the news? And if something's important enough, you'll hear about it. And the third was I focused on mindset with really putting a lot of more positive input to remove a lot of those limiting beliefs and replace those with more empowering ones.
Oh man, I love that so much. I really, really like cut off friends, cut off the news, focus on mindset. I mean, obviously, I'm huge on mindset. So we'll probably touch on that as well. But I wanted to kind of just touch on something you said. I mean, I think we have to bring you back, Sterling. You dropped out of college. I mean, what happened there?
Yeah, for one, it was just not a fit for me. I got really bored, and I would like for everyone to guess how many times I took chemistry 1 and 2, and we'll later revisit that. You may have to remind me, but in essence, is that I ended up. I was going through the classes. I remember I would fall asleep in several of them because I was just that bored. And I remember one teacher came up to me and said, Sterling, if you fall asleep in my class one more time, that we're going to have to, withdraw you. Very next day, I fell asleep in the class because it just wasn't fit for me. And at that same time I was shifting, I actually found a mentor in real estate, started working within their company. And I remember being up all night because I had an Amazon business that I was working on too. But during the nighttime and also during the day, I would work on that real estate business. I was saying, well, I'm making more money here. I enjoy this. Why continue college?
I'm not falling asleep, right? Makes absolute sense, right? It makes absolute sense.
Exactly. It was very warm in that class, and I had a hat on, but of course they caught on and knew he's asleep back there. And for those of you, that was a little bit of a cliffhanger that I took chemistry 1 and 2 a total of 5 times. So that goes to show you, it just was not a fit.
Fascinating, fascinating. So you said you went from construction to investing. So for those who are listening, do you think that's a kind of natural path? Some folks would like kind of jump on the wholesaling bandwagon or, try to flip or do something, just kind of wiggle into real estate investing. What are your thoughts on kind of your story? Was it like a paid construction job?
Yeah, it was paid, huge grind. I did not enjoy it. And I would say I didn't learn so much from that. The mentorship I ended up getting was with the individual who was actually in the business. They own apartments, they had their own property management company. And so I was really just got thrown into the fire in terms of really seeing the inner workings of that. And then at one point, he said that he wanted to diversify from multifamily to single family. Normally, it's the other way. And he said, I've got the cash, I've got the know-how, but I don't have the time to find the deals. I had the time to find the deals. I didn't have the experience. I had some knowledge, but I didn't have the cash. So through the mindset and the self-improvement, I looked at, okay, I'm at A, first deal is Z. How do I now bridge the gap? So there's that. And to answer your question is, I mean, the construction, you can leverage that and then transition. But if I were to go back and do it again, I would start with the investing side and just jumping right into it.
And so I think that's a good segue. How did you jump right into it? So you had, you were working with this mentor who kind of did a 180 from MF to, SFRs, multifamily to single family resident, which is really fascinating. How did you make that leap?
It just came down to one, I started getting myself out there. I was on biggerpockets.com, and it's 6 or 7 years when gosh, time really does fly. But I started being on that platform, networking, understanding the industry. And what I did is I started networking. I went to the meetups and I started the marketing efforts, because at this point he said that he wants to find a deal. And I said, okay, well, you want to find a deal? I also want to find my first deal. And then from that, just started the marketing efforts, and through the actual networking element, ended up getting a deal sent over from a wholesaler. The numbers made sense. And at that point in time, this is a learning lesson for everyone, is that one, do not trust a broker's or wholesaler's numbers. They're going to rosy it up as much as possible. Of course, it's conflict of interest, you could say. Well, it is conflict of interest. And what is the second? I was going to mention. I forgot my train of thought.
Yeah, it's
but
okay. It's
yeah.
okay. So okay, so that's kind of how you started. So you went to the meetups, you started, looking at deals, so evaluating deals. You had your, your filter
Yes.
lenses on. You got your thought
The
back.
evaluating, the
Yes.
evaluating.
Yeah.
Yes, I use rules of thumb. And this comes down to knowing your numbers. Is what I see. What I did was I was using the 2% rule, which many people know the 1% rule, which is you rent, you're all into a house, repairs plus purchase price, $100,000. You expect to rent that for 1,000. Here in Indianapolis, you can get the 2% rule in working class settings. Now you're not able to get that because things have appreciated. So that's what we were using at that point in time. But one is, it doesn't take, if the property is in a flood zone, your insurance is going to go up, if your property taxes. So that's one learning lesson for everyone, is there's calculators that are out there to really help you understand what is your actual return on investment.
Awesome. So now I'm kind of, waiting for the favorite, well, my favorite part, right? Multifamily, because that's what we do, right? We acquire apartments. So you were doing some investing, meaning some single family, right?
Mhm.
Actually, before we go into multifamily, so how did that go for you? Kind of tell us, like, what was your best deal? When did you think, aha, like I kind of got this nailed down? Just kind of tell us a story of, a good deal. How did you find it? How did you fund it? And just kind of the backstory before we go to multifamily.
I would say that very first deal was the best deal, because that's how I was able to get my foot in the door and really get the snowball rolling. And I got thrown into the fire to, hey, Sterling, go figure everything out. And that was my real, I would say, education that I got. So it was, total purchase price was $25,000 here in Indianapolis. Very affordable properties, you guys. And people in California, like, is that a shed? No, this is an actual house. I mean, decent, working class. And the rehab was $25,000. So this was his cash that he all put into it. And then instead of me taking a wholesale fee, I requested to retain equity. So it was 90-10 within that. And then, yeah, after that, I got thrown into the fire. Hey, Sterling, managed the title company, the transaction with the title company, do the leasing, do the property management, take the incoming resident calls. And one thing that I experienced, which I did not even know, and this is also another learning lesson, is just taking action, because there's no amount of reading that you can experience by actually doing the work itself. I should have a quote somewhere back there that says, do the work. That halfway through the residents, the tenants, they actually moved out and started subleasing. So I had to figure out, okay, now what do I do in this case? And then actually, you just can't tell them to get out. You actually have to evict them in that case. So these are all the things that I ended up learning, but I ended up taking action. And that's why that was my best deal.
Best deal. Nice. Okay. Yeah, I thought I just changed my virtual background when you said background. I was like, oh yeah, I should have my background up too. So now you're in the game, right? You're in the real estate investing game, and you were like, hey, I wanna go bigger, right? I wanna go bigger, and then you went into multifamily, but actually, that transition isn't as straightforward, because when you start reaching out to brokers in the multifamily, space, they don't care if you've done 100 houses, right? Because it's just a different landscape. So how did you
They
make
do
that?
to a certain extent over
Mm,
someone who doesn't have any experience. So there's
mm.
a little there. And my approach is I go direct to owner because I haven't had much success with the broker's route. And yeah, the very first deal was driving for dollars, and it all started with a phone call. And this was a 46 unit acquisition.
Wow, tell us more. So how do you, I mean, what does that process look like? For those who don't know what driving for dollars is, what do you actually do to get, someone that owns a 46 unit to actually take you seriously?
Yeah, and one thing is all sales, everyone, and not having limiting beliefs. Because I spoke with someone the other day, a student, and someone that was looking to get insights from me, and they talked about their age. And I said, age is irrelevant. That's a limiting belief that you're putting on yourself. So that very first deal is driving for dollars is in essence just driving around looking for properties that need work. So it was very targeted, wanted to acquire deals on the south side of Indianapolis because there was upside and you could still get properties very affordable. And then from there, drove this specific neighborhood, saw this property that needed work, pulled the public records, owned an LLC, found out who owned the LLC, picked up the phone. That's how easy the process was. But of course, the actual execution, because there's a lot of that you have to do in order to get to this one. And turns out their motivation was they were shifting from being a operator to being a debt collector, and they were running this property into the ground because it was about 65% occupancy. So those were some triggers, and this was their very last apartment that they were actually selling.
Fascinating. So you basically took over that property and you mentioned it was 60 something percent occupied. What did you guys actually do for somebody listening? Like, oh, wow, for every 10 units, only six had people in it. How did you guys turn that around?
Yeah, so it was a complete overhaul in terms of renovations. So we rebrand the property from Southview Apartments to Garfield Place Apartments. This property is we have sold it, so we've gone full cycle. The parking lot, we did a seal coating, restriping, and also patching of the potholes and all that. Did the upgrades, the interior units, push up the rents about $100 to $115. So yeah, we just went in there and updated. There was actually an entire building that was down due to fire damage. So this is one thing that I would want to share with everyone is that these older properties, when you're going in, you have these larger budgets just to put more of a buffer on there because it's likely that you may go over budget just due to some unforeseen costs once you actually get in there.
Oh yeah, we know all about that. So another self-limiting belief, that I hear from a lot of people is, all of you're putting offers on $20 million buildings and 50, like how do you get this kind of money? Like how do you, raise equity? So I'm gonna ask you that question. Like what are you guys doing? What are you doing with your team to actually raise equity and fund some of these deals?
Yeah, so as of recent, we've been able to tap into what you would say capital partners as the raises get larger, but more so on a smaller scale is myself, I was the brand, the individual that would be the funnel in essence. So bigger pockets, being on podcasts such as yours, having my own podcast, the real estate experience, and just pushing out content and value and get understanding who your ideal investor is, where their eyeballs are and where their ears are, and positioning yourself to be of value. And that's how, in essence, you get them in your quote unquote funnel. And then from there is that's when you present the opportunities.
Wow, we can keep going and going, Sterling. One last question, and then we'll go into the quick rounds. So you've started from working with someone in construction all the way to 400 units, and obviously there's just so many more units to come your way. What would you say is that one single thing or trait that has really helped you? I'm gonna ask that question later again, but in a different way. But what is that one thing that you can think of that has really helped you going through kind of from how you started, Section 8, and then all the way? What is that one thing?
It's what you mentioned earlier. It's all mindset. Firm believer. On these podcasts, we can share all the strategies, the tactics, but if you don't have the right frame of thinking, it's like a governor on the car, which if the car can go 200 miles per hour, but the governor on there is only capping it at 120, it's the same with people's limiting beliefs. And to this day is I'm looking to uncover the more limiting beliefs that I have so I can keep further unlocking and reaching new levels. So it all starts with mindset.
Love it. So we're definitely joining into the quick rounds. These are going to be quick questions, quick answers. You ready, sir?
Yeah, let's roll.
All right. Very first question. What makes Sterling White unique? What is that differentiating factor that separates you from the next guy or the next girl?
Yeah, I would say my story. And that's what some people, well, most people are able to relate to, but especially in today's age with social media and pushing out content, is I can put out tips, 5 ways to buy your first multifamily deal, or what I lead with is my story and the trials and tribulations and how I was able to overcome them and share those on this podcast. And that's the thing that really separates me from other individuals because Sonder Investment Group, the word Sonder is derived from each passerby that you experience in life, person that you pass by has a vivid and distinct and unique life as your very own.
Interesting. Interesting. Next question. What was the last book that you've read, and what was the one thing you picked up from that book?
Man, what was the last book that I read? I mean, I've read quite a bit. I would just say one that I read that was really good. That Shoe Dog by Phil Knight. Have you read that one?
I have not read it, but it's on my list.
Oh, it is fantastic, and it's his memoir, but really just understanding that how he was able to build that business, and it's not what most people see. They see the highlight of where Nike is today, but they don't see everything that led up to that point and almost failed right from the beginning.
Yeah. Final question. I mean, you've got a lot going on. You're pretty heavy on bigger pockets. You're doing a ton, obviously building your company, working on podcasts. What do you do for fun?
That is, I work.
What is that thing you call fun?
Yes. I would say I do enjoy traveling. Just recently, I went to Puerto Rico, but more majority of the time I did work because it's just a habit. If I don't work, I'll get bored. I've recently taken up boxing, working out, so I do enjoy working out. So I would say those things as fitness is what I really enjoy, and just a whole self improvement, self development. Of course, I do have some escapisms that I go to. Sometimes I'll play some Xbox. What was I playing the other day? Resident Evil. So I was
Oh,
playing
that's a good game.
that game. So
Yeah,
so
yeah.
yeah.
Yeah, I haven't played that in a very long time. I haven't played PlayStation. I would never touch an Xbox. No way, ever. I'm a Sony fan for life.
Oh gosh. Okay, there's nothing. I was for the longest time, and I wouldn't mind because the thing is, God of War used to be my go-to game. So enjoy that. And it's not on Xbox. So
Okay,
yeah.
okay, fair enough. Yeah, I mean, if there's somebody maybe in your market in Indiana or just anywhere else in the country, what's the best way people can connect with you, get to know you a bit more?
Yeah, so you can find me on the Instagram, which is Sterling White Official. One more time, that is Sterling White Official. And then my website is sterlingwhiteofficial.com. One more time, that is sterlingwhiteofficial.com. Either way, slide into the DM on Instagram, for instance, and happy to be of value.
Awesome. And the name of your podcast is called The Real Estate Experience, you said, right?
Yes, indeed.
All right. Sterling, you're a legend. Appreciate you. Thank you so much.
Thank you so much.